Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'm going to interject my financial opinions as we go through it based off of the charts. If you guys need help with anything, check out finding-value.com. That's where I dive into individual companies, individual sectors. I do a lot of training sessions as well, and I usually throw them sometimes at the beginning of question and answer sessions if you guys want them. And we have a question and answer session coming up on Saturday at 7 a.m. And we do have a discount called LEAP for leap year. So let's dive in. I'll give you my financial opinions and let's see what's going on in the market today. So this still looks good to go higher, guys. I mean, this looks strong. Again, it's basically the stair-stepping pattern that I see. We broke to the upside today. The chart to some degree told us that this thing is still in an uptrend. And you got to keep in mind, there's insiders trading bonds that know this information beforehand. It's not like this was just released and people are like, oh, really? This is out of surprise. People were positioning in it since December uh, of 2023. So this still looks good to continue higher. What are the ramifications of the dollar going up and yields going up? Well, if yields go up, continue to go up, and the dollar continues to go up, you're going to see precious metals have a headwind. I mean, it's going to have a stiff headwind. You're going to see, I think, the S&P 500 pull back, the Nasdaq pull back. You're probably going to see strength in oil. Oil could be one of the drivers of this. Inflation is generally transferred through oil. And historically, when you look at the 1970s, um, you get credit coming into the system, and oil, the supply of oil and GDP, supply of commodities and oil, cannot keep pace with credit expansion. And that is inflationary. And I think that is what is occurring. And this time, um, it could be the money being created fiscally through the government spending and interest payments and all that stuff. That could be a large driver of it. And oil, I don't think oil can respond, and maybe even some of these commodities, as quickly as it could have in historical timeframes. This could get pretty ugly from an interest rate perspective because inflation. I don't know if they can do anything about it if you've got large fiscal spending, big interest payments, and money just being created out of nothing. But dollars up, we've got the 2-year yield just rocketing higher, almost 4%. Big move. And again, what I see is there's your downtrend line, but from this point forward, you've got big green armies showing up, which makes me think that yields are going to continue to go up. Now, I'm not saying, when I say continue to go up, that does not mean that every single day is going to be this big, huge yield movement day. It's going to work its way on up. It's going to grind on up. It's going to do that stair-stepping pattern on up. And that's still intact. The 10-year yield also ripping through that resistance line. There's that resistance line I put across. It's hit this a couple of times. It's definitely broken through. And to me, it looks like we are going higher on the 10-year yield. What does that mean? Higher mortgage rates, higher interest rates across the board here, a potential of further inversion of the yield curve, more inflation coming back into the system, oil being a potential leader. And I think natural gas will catch up behind it once we get through this glut. TYX also breaking through resistance, working its way to the upside. This is a strong headwind for a lot of interest rate sensitive assets. You're going to see them probably head lower if this continues on up. And it looks like this is going to continue on up. This is a big bullish engulfing of a lot of days before it. TYX TNX ratio, surprisingly, working its way lower. The curve is inverting. Gold is not going to like this. We just have a very strong dollar, yields moving up, and the yield curve inverting, with the 10-year going up faster than the 30-year. TLT bond prices breaking back down. That looks like it could continue lower. And then we've got the 2 and 10 inverting to the upside. I know, probably surprising a lot of people. A lot of people being surprised here. Your bottom was here in this bullish engulfing, another bullish engulfing here, and that set in motion a flag pattern or pennant formation, and it's breaking to the upside. That is what it looks like. So looking at the assets, we know gold hit a whirlwind of, this is like hurricane force headwinds that it just ran into after this CPI release. And I'll say this, guys, this looks like it could go lower in the short term. If we have further yield curve inversion, this is a squeeze up of a topping pattern, a false breakout, and a break to the low end, a retest, and this could go lower here, guys. I mean, we could see this go lower in the short term for gold. Silver, same thing. We're starting to break out of its trend line here, and we could head lower here, and that looks like it's a potential case. Let's see what kind of bounce we get tomorrow, but it's a possibility that we could head lower depending on what interest rates do and the yield curve inversion. Platinum's following along, but it's up against support, and palladium got sold off. Palladium's not in its cycle right now. If we get increasing interest rates, more inflation, platinum would be the play, and palladium would be the one that continues lower. We've also seen a lot of substitution. So I would think that platinum would be a better play than palladium at this time. XAU to gold ratio, it is pooping out to the downside quite a bit today, down 5%. A lot of this is going to deal with the overall market conditions and how this is all going to play out. Are we going to continue to get the yield curve inversion? Are yields going to continue to go higher? What is Powell going to do? I don't know. But I can tell you this is pretty strong selling pressure, and this could easily go lower if those conditions persist in the market. The CRB index basically flat today. We've got the CRB index versus the S&P 500 up because the S&P was down. And this could easily really start to take off if we see pressure in the S&P 500 build due to interest rates. And the changing of pricing of higher interest rates where everyone thought Powell was going to lower rates. I'm going to call it everyone was off sides. And then if everyone's off sides, this is what commodities will do. Something like that. So GDX was down quite a bit. We had a little wick at the bottom, not total lost cause, but still, what this was is a pattern. It was a halfway pattern where we could head a little bit lower. That occurred in GDXJ as well. You can see that halfway pattern here. You also have it in SILJ. The pattern was here. And maybe it's getting close to a bottom, but we got to see yields turn here, guys. I'm not at all thinking that this is a bottom yet. Crude oil up 1.05%. It's trying to break through this strong resistance line going across there, that horizontal line I put in there. So we're right up against resistance. If we can clear this, I think we're running. I think we're going higher. We're coming into seasonality positive for crude oil. And generally it goes up all the way till July or so. So I think crude oil looks good and we're trying to break. We're right up against resistance. TTF nat gas moving down a little bit, 1.2%, right around the support zone. Natural gas in free fall here, down to $1.67. That was down 5.6%. And in my opinion, this will be soon, and I don't know, we might get a little bit lower here. This will be a very good opportunity if we can turn this thing around over the next, I don't know, however many months. But this is basically blowing off the charts for the ratio charts for natural gas. It is ridiculously cheap, but it's going to take some time to work this through the bottom here. XOP, yeah, you know me, actually not looking too bad. It was down 1.5%, and it was a monster down day for basically everything in the market. And this is holding on. It's holding on. So this very well could move on up. I think it's waiting for oil to break out, and then we'll see the oil and gas exploration break out. Keep in mind that gas has been pretty weak too, though. OIH down 1.67, but it put a wick right on support, so it's hanging in there. It's hanging in there at the moment, and let's see what oil does and what rates do. If rates go up and oil goes up, very well could see this get some momentum here. Raw physical uranium trust, it's slightly lower today, down 0.6%. To me, this looks like a flag pattern that could potentially head lower, unfortunately. So I think I would be looking for, if there's follow through to the downside, this could get a little bit ugly, is what I'll say. URA selling off. Are these trading like tech companies, the uranium sector? I don't know, but we're getting a little bit of stronger selling pressure on this side, and it's persisting today, down 3.23%. So we could see a further pullback or consolidation in URA. URNM also getting that type of selling pressure, but URNM is right up on top of support. Will support hold? Will we gap down tomorrow and then work our way on up in some big bullish candlestick? We'll find out tomorrow. And then URNJ also getting some selling pressure here with some of the less than ideal balance sheets. This is a bearish engulfing here, and that generally results in a lower move. We've got TAN getting smoked as expected. It seems like this is a very interest rate sensitive ETF. And if interest rates go up, I think this is going to have a lot of headwind for moving on up. I mean, this is a sector that consumes commodities and tries to gather sunlight, which is very, very low in energy density. It's not a very good way to collect energy, but these guys don't make a lot of money, and I think they're very interest rate sensitive. Copper is also interest rate sensitive, but it's hanging in there for the time being, at least the physical copper pricing, futures pricing. COPX didn't fare as well. It's down 3%. Looks like a lot of people just went on a selling spree. But copper is sensitive to the overall market and the economy. And maybe people think that interest rates are also going to impact copper. But we also are going to run into supply deficits here. And we'll see what inventory levels look like over the next year or two. I think that copper is going to be probably holding its ground quite well, given where inventory levels are at. Lithium, again, this is interest rate sensitive, does not like the interest rate going up in dollar. Same with REMX. These are all selling off. Along with the S&P 500, it's holding on barely. It's got a little bit of support there. I think it's holding on to see what interest rates might do. NASDAQ also selling off. Very surprised at how resilient the S&P and the NASDAQ have been given interest rates where they're at. Yes, they are completely overpriced in relationship to where the interest rates are located. That's my opinion. I would be watching out. KRE doesn't like those interest rates and dollar going up, sold off. Emerging markets doesn't like it, sold off back to support. This doesn't look too bad. XHB, yeah, down 3%. It was really getting moving here, and it got whacked today. So again, we'll see what this trade's like. It's back basically at support. Could be doing a retest. Moo also moving down. Ooh, it's not at 69 yet, but it could get to 69 on Moo. That is the full retest, and I was wondering if it's going to get the full retest here, and it could even go a little bit lower, but it looks like that's going for it. We've got iron ore moving on up. It's bucking the trend. That actually looks really good. Go higher. That's a bullish engulfing today, and then we have another kind of bullish candlestick there. So we got two of them in a row. I would see if this thing starts to take on off. We do have a lot of momentum here coming to the downside, but we're getting the Green Army to show up, so that's good. We've got aluminum also down a little bit today. Doesn't like interest rates going up, and we're back at that support level. Baltic Dry Index up 1.75. Doesn't look too bad to try to work its way on up. We've got Newcastle Coal up 0.4%. I think it's going to hold in here and probably base out a little bit longer. Nat gas still needs to base. It's just been in free fall. So I think coal is going to remain in this basing pattern for a little bit. Bitcoin down a little bit. Um, Still looks good to go higher at this current moment. That's a little bloody nose. Ethereum's also got a bloody nose. That still looks good to go higher, signaling massive and rampant speculation is still in the market with a lot of liquidity. So yeah, that's still moving on up and it still looks pretty good. But that's what I've got for today, guys. Thumb up for the content. Subscribe to the channel or the website if you like. And I would say oil's probably got the surest footing here, given where interest rates look like they're going and where the dollar could potentially go. And they kind of move in tandem. A lot of other things that are interest rate sensitive, we'll see where interest rates go and we'll see um, how much of a headwind interest rates provides for them. So that's what I've got for today. And we'll catch you guys later. This is Finding Value.